On today's hot sheet, we've got the gold standard of home prices. The Shiller index is out, as well as FHFA. So we have a comparison. We have a report from Zillow on the largest and smallest housing shortages, as well as mortgage application data. Today is Wednesday, June 26, 2024. I am Byron Lazine, and the hot sheet starts now. Good morning. Welcome into the hot sheet. I am live in Dallas, Texas here, 8:30 local time. I'm honored to have you joining me from wherever time zone you are in, and let me know in the live chat which market you're tuning in from. I'm here in Dallas for the 1,000-watt Branding and Marketing Summit. The stage is actually directly behind this wall that is in front of me. If you're here today, obviously, you're probably in the room getting ready for the conference, but certainly love to spend some time and say hello. All right. Sorry about the hot sheet yesterday. Myself and Bobby, who's here with me in person today, as you know, Bobby from the background of the hot sheet, had an 18-hour delay getting into Dallas. So everybody always says, wow, you get to travel every single week. Yeah, I get to get punished every single week. I won't be doing much travel in the summer. I'm looking forward to that. So my apologies. We were not able to pull off a guest host in the short notice that we had for the hot sheet yesterday. And then the real word was also postponed, but real word, and that would be the interview we're dropping on the channel later today. It is packed with nuggets of information. There is a 2008 comparison prediction type of conversation. I'll just leave it at that. That could blow your mind, especially if you're an avid hot sheet listener. So be looking forward to that interview that is going to be released later today. We were able to get that yesterday when we came in.
Drop in the comments who you think it's with.
Yeah, let us know in the comments. Who do you think the interview is with? I have it on my story. You can't see the face, but I have the location from where we did the interview with on my Instagram story at Byron Lazine. By the way, if we're not connected on Instagram, that is insane. Let's get connected there. All right, let's get into this hot sheet. We've got S&P Shiller, S&P CoreLogic Shiller home price indices just released. Okay, this is the gold standard of home prices. And we want to look at this, even though it's lagging data. I kind of enjoy when we get the, the month that we just exited, like in a week or two, probably 2 weeks, we'll get, some reporting from Realtor, from Zillow, from some of these other sources that are a little bit more real time. It's very valuable when we see real time, but it's just as valuable when we look at, okay, now that everything's come in, we're 3 months, 3 months old, basically. Shiller, let's look at what it really was. So I like looking at real time and then looking backwards, rear view mirror. So S&P, we have, I don't know if you guys can hear that noise. We just, would you walk into a room, see somebody on a microphone and just start slamming doors, or would you ease the doors? And here it goes again. So that's what we've got. No worries. S&P CoreLogic Shiller U.S. National Home Price Index. All right. Thank you. Thank you. S&P Shiller reported a 6.3% annual gain for April 2024. So that's year over year. Now, when we looked at it in May, we were at a 6.5% annualized gain. So 6.5 now to 6.3. Interesting. This reflects what we've seen, in real-time data as well, that we're going to start seeing home prices cool off. We're going to start seeing, now I'm not talking about a cliff or anything like that, but we're going to start to see a leveling out. 6.3% is still an annual gain. It's still a very strong number year over year. It's not the 6.5 that we had in March. Okay, it's a step down. It's an early inning step down. The 10-city composite showed the same thing. 10-city composite had an annual gain of 8%. That's down 8.3% from the previous month. The 20-city composite gain had a year-over-year increase of 7.2. That's dropping from 7.5%. Now, historically, you would think March to April that you'd get prices going up. Okay, not the case here. We have inventory going up, yet more buyer hesitancy across the board. Might be different in your market, but across the board. San Diego would be an outlier market, had the highest annual gain among 20 cities, among the 20 top cities that Shiller covers, with a 10.3% increase. Okay. New York and Chicago followed an annual increase of 9.4 and 8.7 respectively. Portland had the smallest year-over-year growth with a 1.7 annual increase out of those 20 cities. So looking at the 20-city composite, that's the case there. Brian Luke, head of commodities, real and digital assets at S&P Dow Jones Indices, says for the second consecutive month, we've seen our national index jump at least 1% over its previous all-time high. 2024 is closely tracking the strong start observed last year. Okay. The Northeast is the best performing market for the previous 9 months. Okay. So that trend continues. The Northeast with the really low inventory. And we're looking at prices. Northeast has the best performing market for the previous 9 months. Again, New York went 9.4% annual increase. 2004 is tracking the strong start observed last year. March and April posted the highest, largest rise seen prior to a slowdown in summer and the fall. So we would expect some type of a slowdown here, and these are the early innings of that. Now, let's shift over to FHFA. That's Shiller's report, and Shiller is, again, oftentimes considered the gold standard. By the way, BAMX members, there is 9 charts and downloads available for you to use on the Shiller data. I like the Shiller data, again, because I think it's important to say, hey, you're seeing headlines of these high record prices, and when you're seeing that in the headlines, often you're seeing Shiller data. Here's what that looks like, okay? That's 3 months old. Here's what the market looks like today. And Bobby, I don't know if I keep freezing up. I don't know if this is, we're good? All right, let us know in the comments if we're good. We're operating on this conference Wi-Fi, so I want to make sure you guys are able to get that crisp and clear. But when I'm sitting down with a seller, I want to say, hey, the headlines that you're referring to, these record prices, it's 3 months old. We're trying to sell in July. We're trying to sell in August. We're putting a plan together for you to go on the market in the fall. Here's the market dynamics now. Here's what we're seeing. And Shiller, while it's 3 months old, is already showing 3 months ago a cooling off. What's it going to look like when that data catches up? Well, I can share with you what it looks like right now. Here's what's happening in our market. Okay. FHFA is in line with Shiller. FHFA came out the same day as Shiller yesterday. U.S. home prices in April rose by 0.2% compared to March, but their year over year from April to April is 6.3%. That's right in line with Shiller. The previously reported 0.18 price increase in March 24 was revised downward to 0%. So according to FHFA, flat was the revision for March. Now, if you've been following the hot sheet, I love the FHFA House Price Index, the HPI monthly report. This is available for you to grab inside of BAMX. We've also carved out the most applicable charts for you so that you can utilize those in your marketing. When we look at monthly price changes, estimates for U.S. Regionally, so the price change March to April for the U.S. again was 0.2% up. Pacific was 0.4% up. Mountain flat. West North 0.6%. West South down 0.2%. East North Central at 0.2%. And East, South, Central 1.4%, New England up 7%, Mid Atlantic down 0.2%, South Atlantic at 0.1%. But here are the trends that I love looking at these every single month when FHFA comes out. This is a line graph for monthly housing price index. Okay, so this is monthly. Why is that important? It shows you that the longer you wait as a buyer, the more you're going to pay for housing. And the story is true from 91 till today. Outside of Lehman collapse, outside of mortgage crisis world, outside of everybody, your mother, your brother, your cousin, your sister losing their job. Okay, that's that one blip on the radar in the middle. Outside of that, it's up and to the right. Every month, home prices become more expensive on an annualized rate. Remember, this is seasonally adjusted. This chart that you're looking at, but it's up and to the right. It's very consistent, and this is one of those things where, hey, a buyer says, "I want to wait till prices come down." You share this chart. Tell me more about that. Tell me more about what you're waiting for. Are you waiting for a global economic collapse like we saw in 2007? Because that's the only point on this chart that we saw home prices come down. Okay, yeah, in 22, we saw a reaction to rates for like literally a couple of months. Is that really prices coming down? The entire chart shows up and to the right on prices. So tell me more about that. What are you waiting for on buying a home? Because it's not for prices to come down, because that's not realistic. If we look back to 1991, we're just not waiting for something realistic. So just tell me more. Tell me more about what your experience is waiting for home prices to come down. Tell me more about what you're really waiting for. I'm here to help. I'm here to serve. Just need to have as much information as I possibly can. Here's a 12-month house price changes, prior year versus most recent year. Again, U.S. At this point was up 3.1% for the year, now 6.3%. Last year was supposed to be the year these prices went down. Didn't happen. Pacific, last year at this time, down 3.5%, has gone up 5.7% the last 12 months. Mountain region down 2.4% this time last year, 5.2% up now. Really, every region is up. The region up the least is the West South Central region, according to FHFA. Bunch of data in here. You can look through it more. Again, I think the headline here is FHFA and Shiller match up. You've got 3.3% annualized up on home prices, which is down from the annualized number last month at 6.5, according to Shiller. So you've got home prices now that are reflective of April that are going to be cooling off and cooling off here seasonally. As you look at how big the gain is, they're still going to be up, seasonally adjusted, but they are starting to go in that downward trend while inventory increases. So, interesting note there. Early innings. The pod that I'm going to be releasing later today, the interview later today, I'll get into some of that where potentially prices are going to be valuable information. Okay, switching over now. Zillow just came out with a report on housing shortages. Okay, so Resi Club covered it. It's Zillow data that was just released. It shows the U.S. housing shortage grew to 4.5 million units in 2022. 2023 was the best year for construction since the Great Recession. We had 1.45 million homes. The housing gap continues to grow due to household formation outpacing the growth of housing stock. Okay, this is again according to Zillow. Zillow's estimate for the U.S. housing shortage rose to 4.5 million units in 22. That was up from 4.3 in 21. Factors behind this shortage, Zillow says just under 1.4 million residential units being built in 22, highest number since 07, yet the housing deficit continues to grow. Vacant homes and housing demand 22, there were about 3.55 million vacant homes available for sale or for rent. Approximately just over 8 million individuals or families were living with non-relatives, potentially preferring to live on their own, creating a deficit of over 4.5 million homes. Okay. Markets with the worst housing shortages. All right. Which are the markets that have the worst shortages? And listen, you'll be able to kind of figure these out, especially if you're in one of these markets, which ones they are. But here are the top 10. You've got Boston, Northeast makes sense with what the Northeast has seen. Sacramento, Portland, San Diego, San Francisco, San Jose, Seattle, Minneapolis, LA, and Austin. Markets with largest increases in supply. Austin, Orlando, Jacksonville, Dallas, where I am right now, Houston make out the top 5, San Antonio, Raleigh, Nashville, Phoenix, and Seattle are the 10 that have the most abundance of housing supply. Okay, so here are the 15 largest metros according to Zillow, and the population. So San Francisco, 1 year percentage change in housing shortage would be -6%. Residents per missing housing unit, 30 to 1 missing unit in San Francisco, 32 to 1 in Boston. Which Boston's at 5 million, San Francisco's at 4.5 million on population. San Jose's 34 to 1 residents per missing housing unit. Can I categorize that? No, I can't. Okay. What are some of the deeper ones here? Boy, Memphis, Tennessee, 399 residents per missing housing unit. That's bonkers. New Orleans, 229. 1 year change in housing shortage. Orlando, 40% change. Okay, so a whole bunch of data there. We're going to carve that out for you. You can be able to grab that inside of BAMX. Of course, use code HOT to get inside of to get in BAMX and join the community there. The New York Metro, 389,924 unit housing shortage in New York. And in these markets where you see these significant housing shortages is where you see obviously prices going up the most. Okay.